Hey guys, what's up? Here with Robert.
Oh.
We're going to let everyone roll in here for a few minutes, but we are going to be doing a giveaway later. Once we reach 100 likes, we will unlock the link for that, and you guys can start signing up. We'll give away a couple $200 credits and a couple shirts.
Nice.
TFD branding. If you guys want, while you're waiting, just post how your trading day went in the comments. Maybe we'll flash it on the screen.
Who do we got there? What's up? Hello, everybody. Nice. I actually have a futures desk contest going on too at my server right now, so that's cool. Yeah, nice. There's opportunities to win, right? The market's crazy today. I'm trying to stay out now. I'm kind of sitting on the sidelines a little bit because it's pretty all over the place, with the news. The ladder gets thin and it cut you up.
Sure does, and that news is coming, man.
For sure.
Especially with Trump over in Davos. I'm sure there's going to be some meetings and some speculation. So.
Yeah. Always.
So you took some trades this morning, though?
Oh, yeah. I was trying to, at first I was kind of leaning to the short side because I felt like we might have an opportunity to stay under some of these key areas here, like on NASDAQ here around this at like 220 to 230, 240 in there. But then we blasted off, and then you just got to get on board. You got to try to find a spot to get long. And then they gave up on that. It was going good for a minute there, but I'm up on the day. I'm okay about it. It's all right.
Okay, that's good. Just lock it in,
Right.
It's good. Keep paying attention to the market, the context. Step aside if you need to, but news events, it can be rough when you're holding right through them because the volatility can be ridiculous at the moment.
Yeah, right.
But news events are, part of retail's edge, where we need to ride those news events to at least the fallout from it that happens right after. So
sure.
Definitely something to keep in mind.
Gotcha.
All right. I think we've waited long enough. Let's introduce Mr. Robert here. So Robert, you want to, he's a new trader on the desk. He's not a funded trader. He's going through the assessment. He's been taking it slowly since right before Christmas, and he wanted to come in and share sort of his progress, his strategy. He's got a Discord community he's a part of. A lot like most of you guys listening probably can resonate with this. So we'll go over some of his trading, and maybe we can find some paths forward for him.
Nice. Yeah, thanks, Josh. My name is Robert. I have like you said, a small community. I'm on YouTube. My name is Robert Trades Futures. I've been trading for, a couple years now. I've been funded several times with various prop firms. And I've done well, but then I've also done poorly. Like lately, I've been doing poorly. It's been pretty volatile. I'm really working on trying to dial in on my discipline and have a better handle on what my setups are, a better handle on my execution, because my analysis is pretty good. Over the past couple of years, learning to analyze the market, learning to look at the market in a way that can give me like a narrative or a story. I have some kind of contextual understanding of what's happening, and I do that pretty well. But when it comes down to the execution, sometimes I fumble, sometimes I get a little mad, and I might have like some revenge trading come in. There's different things where I might like. I find if I start going back to back, if I start taking trades back to back, that's when things start to deteriorate and fall apart for me. You know, you take a few stops in a row, and my mental state deteriorates, and then I'm looking for ways to try to make it back. I'm looking for ways to put more size on to make it back more quickly. That's one of the things that I do love about this company is that, you know, when I signed up and put my assessment in, I was able to say, like, I don't want to have more leverage than this. I can cut myself out. I don't want more than 2 minis. And I know that some people say, no, you want to trade much bigger, but I really don't. Based on where I am in my journey, like, and the amount, like, I only have a certain amount of drawdown to work with here. I'm pretty sure I don't need 10 minis right now, regardless of what size account I pick in here, right? So, because I don't really care. For me, it doesn't matter about evaluation or about the funded part. I'm trying to trade it all the same way so that I can develop consistent habits in my trading. There's an argument to be made for trying to pass the evaluations fast. I'm not in a hurry. You know, this thing isn't going anywhere. There's going to be a market trading somewhere forever for the rest of my life. I want to learn how to do this with some kind of consistency and some kind of way that's replicatable over a longer period of time, so that hopefully, you know, I can build some money, put some money together. That's what we're all here for, right? But I guess that's the short story. Something
No,
like
I
that.
love it. That's the kind of story I want to hear from all the traders coming through the door. I know the space has unlimited opportunity right now with prop firms, and it's sort of, how do I get my ROI on my entry fee to get to the payout? And they're not necessarily thinking long term. They're thinking of it as its own market. That's sort of like an options market where you can pay a certain fixed cost to maybe get a really big win.
Right.
And I'm sure everyone wants that longer term success where they can grow an account, but that short term money and how the props position themselves, for sure, kind of cater towards, how can I get as aggressive as I can to get this payout? Like, how do I get aggressive as I can to get this second payout? And anything after that's just luck. Anything after that would be great, but I want that short term money. And it's a system to be gamed, and I get it. And honestly, I expect traders to do it, right? There's an edge in that market. There's an edge in buying prop accounts. So they're using the edge. That's what good traders do. But unfortunately, it really builds bad habits. And I have not seen traders that do a good job of separating themselves from the sim prop game, where they're trying to just get really aggressive and get those payouts based on how many resets they can do. And then traders that can hold an account for a long period of time, which I think most of the people that are coming to prop are not really feeling any benefit other than that. So they think of it as, you know, I want to trade my own personal account eventually. This will just fund my personal account, but you're not setting yourself up to be able to do that. And I think a lot of people probably understand that. The bad habits they're building don't go away when they go to live and they go to funded. It might even get worse because there's more emotion on the line. So yeah. So I'm glad you're taking the initiative. You're saying, yes, I could get really aggressive at passing this, but I do want to be a better trader. I do want to do this long term. So again, I'm super happy that you're with us, and I'm glad you're trading it carefully. And I know you're in a little bit of drawdown right now, but I really appreciate the fact you're not just going for a reset. So, you know, this episode is not about perfect trading. This episode is not about gurus. This is about, you know, probably what a lot of you guys are seeing day to day. So not reaching for that reset, continuing to deal with your drawdown. You can see he picked a static account, which we have a little promo going on right now for a couple configurations on that. But you can see he's able to still hold on to this account. He's taking trades small. He's taking small losses per day. And that's what's going to keep him in the game. You go sideways a lot right before you start going profitable. So sustaining an account, holding it, guys, that needs to be most of your guys' focus right now, is just looking at holding an account and not blowing it. Because that's the step right before figuring out that edge, tweaking your parameters, figuring out maybe some of those psychology issues I know, and making the turn. You know, that's what we're all here to do. And if our system can help you guys gain the rest of the prop space, then, well, we're happy to help you do that too. So Cool. Yeah. So maybe let's go through what your strategy is, what
Sure.
your risk management actually looks like, and maybe some more of the particulars, and then maybe we can have some conversations about that.
Yeah, absolutely. So one of the things that I do is I have our Trader Pro set up so that I have a fail safe in here. Obviously, on this account, I've picked here. Let me grab. I have a highlighter actually. Let me grab so I have that $1,200 is my max loss, right? For a daily loss limit here on this account, which with the futures desk is a soft breach, which is great. But on our trader, I like to set something to try to, like, say if I set it at 600, that way I'm not actually taking the whole daily loss. I'm only taking part of it to try to keep the losses smaller. Now, obviously, if we look back through, you can see there's a couple of days that I didn't do that. I took the full stop. And it makes me, each time something like that happens, it's like I have to step back and say, there's something here that, like, why would I take my loss limit off? Why would I do that? What am I doing? What is it that, is it because I just want to be right? Is there really that much opportunity in the market? Is there really a real reason for me to be doing that? Or is it really just my fear of I'm not going to make money today, which means that I won't be a profitable trader in the long term, blah, 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 like this story, right? So now in terms of what my actual strategy is, and my charts are actually under this, we can pull this out of the way real quick and you can see what's going on down there. Let me just get him out of the way. And I have these up. So I trade market profile, volume profile, basically auction market theory, to get my levels and my understanding of where I would be potentially interested in placing trades. Like right now we're trading at the IB low on ES, not on NASDAQ yet. But then after I get into the auction market theory and I've given myself my levels and I have some idea of where we're trading and what trades I might want to take, I go ahead and plan them out based on where my levels are and where we're currently trading and how we got there. Like right now, like for example, if you just talk about what happened in the market today, we had this run up, overnight session. We wound up finding a bottom in here. It's a poor low down here. Which, there's a whole bunch of delta. They found a bunch of support. They started rallying. Then they rallied all the way up into like about almost, what was it, 69.10 on that news event. And then they failed. Not only do they fail in epic fashion, like back through 68.90, back through the IB high. And now we're trading all the way down here on the IB low, testing this trade. This trade I would normally look to try to qualify to get long to play back into the balance. But on a day like today, like who knows? Who knows if that's actually going to happen? I also haven't been watching a trade. I was listening to what Josh was saying. So at this point now, do we trade a breakout? Or are we going to trade an IB breakout where we break down below this, come back into this big area of negative delta right here, try to qualify a short and get, short with them? I wouldn't do that yet. I'm just going to wait and see like kind of how they would play out here, because I use the order flow tools, watching the DOM, watching the footprints, the depth of market. I have that on the screen, where I'm then trying to qualify whether or not big institutional money has actually stepped into the market to try to going in the direction that I want to go, right? So trying to be participating with people that are big who are buying or selling or whatever direction I'm trying to go. I want to see them play their hand first. I want to see that there are big players in the market supporting my idea before I just get in it. So it's more than just levels. It's more than just even the ideas of what my IB trades would be. Because when we go back and look in the journal, I'll show you. I have been using the feature. I haven't done it as diligently as I should. But I've been tagging, because you can tag a trade type and attach it to the journal. And then when I run my stats, I can see that my IB trades are profitable. Everything else, not so much, and having that knowledge to know, then I have to, okay, so it's the hard part about this is I know that if I just trade my IB trades, that I'll be profitable. The question is, will I do that? And the answer is usually no. It's like I do other stuff throughout the course of the day that if I cut that other stuff out, I'm pretty sure that I could be profitable in this thing. Sometimes wildly profitable, like, trying to hold this thing from this IB all the way to that IB, that's going to be tough. But maybe a runner, I don't know.
Well, I'll tell you what, you're on the right track with tracking it. We built it into the system as much as we can so people can use it with the minimal amount of friction. They don't have to import it into other systems. They can just start tagging and start looking at the results. So how awesome. Those unknowns that you have right now, you want to fill that gap with the data, and you're on the right track. So when you're going, So what I'm saying is tracking your trades, tracking your setups, because
Right.
right now it's theoretical in your head, and you're going to have a recency bias. So your decisions are going to be based on this has worked out really well in the last week or two, right?
Right.
I
Okay.
should be waiting for this strategy, and these other strategies don't work. You're going to be very heavily weighted by what's happened recently. That's just a natural occurrence, right? So the data is what needs to be the thing that convinces you. And the data can't go back for years, right? Because markets do change. There's regime shifts. So you need to adjust with those regime shifts. So the last few months is generally going to be that hot spot of like what's working, what's not working, and what do I need to actually be adjusting. So that includes your runner. So I don't think we have a great way I can say to actually track this, but a pen and paper works just fine. But what you want to do is right now you're in a space where you're thinking there's that runner. Do I make more money with the runner? It sure feels like it goes to that target if I were to just hold it. But you don't have a clear understanding or a clear belief really that it's going to give you a net positive outcome. You know there's pain involved. You know you're going to have to hold it. It feels like maybe that's more money, but you need to log it. So take your trades, right? Don't hold the runner. Take it to the target that's more predictable for you at hitting, right? Maybe the opposite side of value, maybe not a full run of some more reasonably close target that still gives you a favorable risk to reward, right? Take that as your target. But every trade you're taking, I want you to say, okay, if I were to have held that runner, what's that going to look like over the last month? Like, should I be holding the runner? Where like now you're going on data. Now you have some sort of belief system that's factual and not just based on what's going on in your head and your emotions of what could be. You can say, no, if I would have held it every time for the month, I took my targets earlier. If I would have held it, my P&L curve would have been this. Right? Okay. That's something that's going to, in the moment, when you're making those decisions, you'll change your trade plan and you'll have confidence now that, no, I have the data to back it up that I should hold the runner. Not sometimes it works, sometimes it doesn't. It feels like it's a wishy-washy area. Now you have clear information that's going to be more convincing to yourself to make the right decision when you're taking the trade. So I would highly suggest it usually comes down to data, right? You have an edge. I love that you're building a narrative here on the market, because I find that just looking at purely just numbers and levels and trying to do math on the market is not enough. So your contextual narrative and your discretionary decisions, I think that's the magic piece. And that's the magic piece we're trying to get from all the traders that are coming here is we can write algos that can do 75% of the job, 80% of the job, but to get that to the point of what the discretion of a human, understanding the market conditions, understanding there's a news event coming up, knowing all these things, it might not be you can't extract that necessarily from volume alone, right? And it would be hard to write an algorithm that does all that from all the different conditions and can weed that out. It's not perfect. Humans aren't perfect, but that little bit of discretionary trading on top of a mechanical system is where that sweet spot is, where you can really start building something profitable.
Right. Yeah. If we could build
marketing's telling me here. Giveaways live. We hit the 100 likes. So guys, drop in the link. Look in the comments on YouTube for the link, and we'll be giving away a couple $200 credits and a couple t-shirts.
Nice. That's great.
So I like where you're going, and you're dipping your toe into the data portion of it, right? You're like, oh, I have this system, I can start logging it, do it, right? Build a convincing belief system for yourself. So, no, I hold the runner, because if I would have held the runner for the last month, it's clear that I would make more than just taking the early exit. Or maybe you find otherwise. Maybe that runner happening and the percentage of time that it happens doesn't stop you out is worse for you. Yes, you might get a bigger win one day, but maybe that winner isn't enough to offset taking the shorter targets more consistently. But whatever it is, that's what you need to be looking at. So when you take the risk, okay, here we go. Sorry, I'm not a marketing guy, but I have a good marketing guy, so he's pushing me. So we have 60% off right now. Use code RTF. That's our boy Robert here. Use his code. We'd like him to get the, he's spending his time here with us, so let's use his code if you can. 60% off. That's all the customizable plans, but we also are doing something special right now where we have what is 75% off a couple very specific configurations of our accounts. You can get to this by going to the main website. There's a link at the top for static pricing. And this is non-customizable. This is what we found is good, consistent risk and growth on a couple static parameters, not over leveraged. You can see it's 2 minis and 3 minis max. So if you adhere to this model for us, we give you a deeper discount because it's more sustainable for us in both the assessments and the brokerage. So, and that's what we're really going for here. Yeah. So so let's go over sort of your risk management on the trade. I can see how you find your levels, where you're looking for entries, your narrative on the day, contextually.
Right.
When you're going to actually execute, what's that look like?
I have a fixed stop, but I sometimes move it if I layer in a little bit more. Now, I'm not saying like DCA in the entire chart, but I mean, you know, if I get in and I kind of enter poorly, I might add a little bit, you know, close to the range, close to the consolidation, because typically what'll happen is I'll FOMO into the wrong side, like of the wrong side of the rotation, and then I'll put a few limits out on the other side to kind of even myself out. And you know, it's not exactly the best way for sure, but my point is that it's not just like an open-ended, I'm going to DCA 15 times in a row or something. It's nothing like that. It's more like it's just a planned entry around an area. Typically my stop on ES is like 5 points. Right now it could be a little bit bigger because it's so wild and crazy. NAS, I try to stay around like 19 or 20 points, but sometimes if it's like this, it could be as much as 30. Then I have the stop on the day that, you know, that's it, it's done. And I've been
DCA is a funny thing.
Yeah.
I think there's a difference between, I mean, in execution, if you just looked at the numbers, you probably wouldn't see a difference between what people would refer to as DCA or adding to a loser. But from my perspective, how I look at the difference there is if you're doing DCA, you're planning for that extra entry ahead of time, right? So if you're I would definitely say if the first entry isn't working and you're adding and you're basically doubling your total risk, like your initial add was your full risk for per trade. So if that's a 1R, using R, right?
Yeah,
if you're aware of that. So if R is a single, what's my 1R unit of risk? Are you taking a full 1R on your first entry? Is that the contract size you're doing? If you are, and you tend to add because, you know, 10 points is great to get in directionally, but if you're looking for larger moves like you are with the style of trading that you do, which is actually similar to the style or how I look at a market, if you're adding and you're finding that common that you're adding more and you're doing 2R and 3R as you're adding, you need to reapproach that, right? Especially if that's happening a lot, even more so, it's a warning sign that you're going to struggle with maintaining your accounts. What I would do is split that 1R up. And I know it hurts because when you're fully right, it's not going to hit as hard. You're not going to get the same profit numbers that you're expecting. But if this works for you and you find a zone that you want to enter in, there's nothing wrong with a pre-planned, I'm going to add a fraction of an R and maybe give myself 3 times to get to full R, right? But you're not going 1R, 2R, 3R, because that 1R, 2R, 3R, that's the bad approach, right?
That makes
adding
a lot
to
of
a
sense,
loser
actually.
to try to correct it. Yeah. Fraction. If you're going to plan on doing this, plan on it, you know, plan that risk ahead of time and don't over risk because you're wrong. That one simple behavior is very bad for traders. It feels good because if you can just keep adding, and I know if you had just unlimited pockets and you could go through 100 micros, everyone's like, I could just do this forever. And then it's like, no, you won't. Statistics do not work out in your favor.
Don't do it on a short.
You might have a system that works out 9 out of 10 times, and then that 10th time when it fails,
and then you're done. It only takes one time to wipe it all out. That's the problem.
Yeah, exactly.
Right?
And you're setting.
And I don't let it run. If I'm wrong, I'm wrong, and I get stopped out. It's okay, you know. But what it's really around is like trying to fix my entry instead of just being patient and waiting for my limit to hit. You know, that's where I need to be. It all comes out of like the patience, right? But I totally hear what you're saying about the R.
Sure.
The R thing is important. I'm definitely going to take a note of that right now about split the R up. If you're going to do it, split the R up so that it remains 1R instead of becoming 2R or 3R. Right?
Do not go over 1R in a single trade, and you need to manage that risk appropriately. So if you see yourself as the market's volatile, I think there's going to be a lot of chop, and you want to split up that R, then do that. But otherwise, Keep the 1R, and 1R does not stretch under any circumstance. 1R is hard 1R, right? There's a time where you can get to be a bigger and a better trader, and you're doing this a while and you're more confident. Don't think of that time now, right? That's a fraction of traders get to a point where they can start really changing their risk and increasing it during different contexts. Obviously, that's where you want to get to, is to be able to up bet size under right conditions. But for now, just stick to a single risk per trade and keep it fixed, and keep a single risk per day. And that's that based on how many trades you tend to want to take in a day, or how many opportunities you kind of find, that's how you figure out your risk per trade. Risk per day, fractionize it, risk per trade.
So if I want, let's say if I wanted to risk like $600 a day, and but I wanted to be like conservative and only place 4 trades in a day, not more than $150 in risk per trade, but split that 150 up if I'm going to add.
Exactly. And that has to be such a hard rule. Do not move your stops. Don't over risk. Like, focus on that 100%. Okay.
Okay. Yeah, definitely.
That's the risk first, your downside first. If you can protect your downside, and you can find some disproportion on risk to reward where you're, it's in your favor, it very quickly becomes, your profit is going to start going up. It hurts in the short term. So gauge your expectations. It's going to hurt when you take a 0.3R risk to get 0.6R return. You know what I mean? It's not going to feel the same.
That's better than taking a 2R loss.
You will be happier man in a month.
Okay.
Yeah. So plan,
I trust you.
Think in terms of month. Yeah. If you don't protect your downside, you're gonna continue to struggle. Okay. And if you add to losers and increase your R in that fashion, you will struggle.
Okay. Yeah, definitely.
That's for almost any trader in this space. Again, if we were at a bank and we're dealing with different parameters and all that kind of stuff, they're going to tell you, it would be a whole different conversation, right? But as what are essentially retail traders, keep your risk fixed for now, and keep it, and just build that system, right? Build that system of protecting your downside.
Okay.
There's obviously a certain point where you're just squeezing your downside so much you can't make upside, but you're in a fine place doing it how I'm mentioning it.
Right.
Cool.
Yeah, this makes sense 100%. I didn't honestly, in my mind, I hadn't even really considered like, oh yeah, I'm above 1R doing this. I didn't even consider it until you just said it right now.
And then obviously you lost probably the whole daily loss on that one trade. Now you've lost your statistics on the opportunities that you're not going to be able to take.
Oh, that's a good point too, right? Because you're not taking those, because you're out of the game for that day. You're not taking the trades that would be data that you would be collecting to find out whether or not you have edge.
Exactly. And I see someone talking about adding to your winners for sure. There's adding to your winners that all makes sense. I like to think of adding to winners. If I put a position on, and I'm in that position and it's a big move, and I'm looking and I'm thinking, okay, this is another great entry for that trade. I completely, and people, this is subjective and people have different views, but I look at that new ad as a completely separate trade, right? So if I'm adding to a winner and it does a pullback, I'm separating the size I entered on the original as one trade. Is that still valid trade? What would be my line in the sand where if it failed there, it would be no longer valid and I need to exit the trade? On the entry, on the second entry, if I'm adding, maybe it pulls up and it does a pullback and I'm looking to get long again. That's an isolated trade as well with its own risk mechanics, right? I treat those as two different trades. You can piggyback on the risk and maybe the extra profit you earned, but you need to take into account that new ad has its own risk parameters, and maybe it's the same target you're going for, but just try to keep that in isolation as you add. At least that's how I like to think about it.
So would it be safe to say on that ad that if you wouldn't initiate a trade there with that risk with your normal stop, don't add there? Is that what you're saying?
I wouldn't necessarily go that far. I'm not going to make a blanket statement necessarily about that.
Okay.
I would just think more in terms of if the market moves and then it comes back and you're like, no, this is an even better trade, right? It's setting up.
Okay.
I would still, from a risk management standpoint, treat that ad as a separate execution. Okay. Don't combine the two and obsess about your average position, right? where you keep talking about, oh, I'm messing up my average position. It's like, no, I took one entry, I'm gonna have an exit for it. I took another entry, that's a separate trade, and isolate those two things as separate trades. Not, oh, I don't want to mess up my average position on this, or etc. Is this new entry a valid trade on its own?
Is it a valid trade? Gotcha.
Forget about what you're making from the other trade. Is this a good execution? What's the risk on this execution?
Okay.
Anyways, that's an opinion. Not everyone has to follow that or it will work best for them, but that works for me, and I find it works for a lot of people.
Gotcha.
Cool.
Okay, what was there was another question too. I'm sorry, I lost it. Risk management and then something else.
I'm not sure what I said, but let's talk to, maybe we'll remember it. Maybe someone in the comments will remember it. But maybe we can talk about, so you're sort of finding a range for your, like a 15, I think you said point stop, 20 point stop on the NQ.
On NAS? Yeah, on NAS, 20 points. So it's like, and I'm trying to play 1 for 3. So like if I do 17, 19 point stop on NAS, I'm playing for like 60 points. I don't always get it. Sometimes I can only get 2 to 1, but on ES,
you want to pull up your charts, different. By the way?
Yeah, sure.
Just in case we need it. Yeah.
There's my chart here.
So I'll jump on that too. And I know a lot of people get comfortable with a fixed sizing, but what I always recommend is, instead of doing a fixed sizing, do something that's based on something that will change with the volatility of the market.
Okay.
So ATR is the easy one, right?
Right.
The easy, obvious one. Maybe a 7-day rolling ATR on your entry chart. Something that's more relevant to what's actually happening in the market today.
Gotcha.
Because if you have a fixed size, you're bound to be getting yourself whipped out. You might need to reduce your contract size, right? So you might need to adjust micros, how many micros you're using when you're in a smaller drawdown account like this. But do something that expands your contract size and risk to match that same dollar amount. So the risk is always a dollar amount. That doesn't change.
Right.
But how many contracts you risk is going to depend on how many points you're using, right? So if you need more room because the market's volatile to not get whipped out, increase your space based on that ATR as a guideline, using structure, which I'm sure you're using as well. That combination, that intuition that you have to build to figure out, this is sort of the area I need. If the ATR is 15, then maybe you're looking at like a 20 point stop, and then you might want to look at the structure of the market and say, okay, where's a defense point here? Where can I see the market on my side previously, and use that sort of as maybe an area to find that 20 point range. And maybe give it more room, reduce size, but as a general starting point on the map, use ATR. So you're taking into account.
And you said a 7-day rolling.
Yeah, there's a million different ways you can do it, but you just need something based on ATR or something similar to ATR. So you'll get whipped out less, but you'll have to reduce your size.
Gotcha. Yeah, I'll definitely take a look at that. I had been going up to the higher stop, like you said, like the 30 point stop or whatever, when the volatility starts really cranking up, because after watching it trade
your risk contracts,
right? See, that's the thing, is like if I go up to the 30 point, I need to put less contracts. That way, the dollar amount remains the same, right? Is that
exactly perfect?
Right. Yep. Gotcha. Okay.
Yep. These little things, if you can stick to them, you will notice a difference in what's happening. Assuming all the same with your finding of entries and those kinds of things, by protecting your downside, not getting wild card on how the market changes, and you're just fixed on the same contract size, you're fixed on the same ATR or point range that you're willing to risk. Like that stuff is you need to be fluent with the market itself. Right. Or it's just naturally going to stop you out more and give you worse outcome.
Gotcha. Yeah. And with the ATR, it's actually representative of what's happening in the market now.
Exactly. And you tend to want to do that on your execution chart. So, and there's a great other uses for ATR, like the daily. If you use the daily ATR, maybe you can get a gauge for expectations on how far the day could go. Obviously there's anomalies, but if you look in the last 7 days, if the average ATR is, let's just say, for example, 50 points, and the market's already moved 30 points, and you're looking for a long, and the risk on that trade, you need to make another 40 points. Now you're going outside the normal of what the days have ranged in the last 7 days. So that use of ATR is a really good volatility measurement to handle your risk management and come up with realistic targets.
Gotcha. Yeah, that makes sense. That makes sense. Yeah, and also kind of give you, like, if you're looking at that and it's already moved this amount, 30 points or whatever, and it has to be a decision that's like, oh, I'm going to back off of this because it doesn't really work out. I have to risk too much for such a small amount of gain.
And you have to sort of bet on the anomaly happening as opposed to what has been happening on average in the last 7 days.
Gotcha.
Which is fair. You know, I mean, every day is different. Anything can happen on any day. Today might be a news day, so maybe you are expecting more volatility. But have a system that's recognizing that, and don't just stick to some fixed thing that makes you feel comfortable because it's one less variable you have to adjust. Like, be willing to adjust those things.
Definitely. Okay.
Because we are reacting to the markets when it comes down to it.
Right. Yeah. Well, we
have is what has been happening recently.
Agreed.
Cool. So hopefully you guys are signing up for that giveaway link. We'll probably end the giveaway here in a few minutes. Please share how can I learn to trade order flow, resources, YouTube videos, or tutorials. I do not believe Robert does that much with order flow. He does look at volume profile, but he's mainly looking at price action.
Yeah, I learned at Trade Pro Academy. I'll throw that out there if that's
okay.
Where I was taught to look at the market, you know, in a contextual kind of way. Yeah.
Yeah, there's a lot of order flow resources, but a lot of order flow and reading how markets move tends to be an learned skill by just looking at the you just have to watch price action, watch how order flow accumulates, and just time spent staring at it. To be honest, that's a huge baseline for order flow.
Sure.
Are we able to use the TFDX platform when we move live? Yes, you can use TFDX when you move live.
I've got on my other screen, like, my footprints and all that stuff too. I do watch order flow to time entries. I use it to determine, like, I have my DOM set up so I can see time and sales in the center and all that. I didn't want to bring all that out on here though, just because
that's okay.
It's a little bit like, it's just, you got to stare at it for like a couple years at least before it starts to become something that even now it's like it's just challenging to teach it, to learn it. It's screen time, you know. But if you watch it long enough, you'll see it. The patterns will come out.
And there are resources out there. I just don't have them offhand here. But maybe some users in the comments can point to some good resources on order flow. How much longer do you have the TFDX platform? So we still have it. We are in a different timeline than other companies with Project X, and we have not been disconnected from Project X. We are still in conversation with them. So that is the current situation of Project X. Unfortunately, I don't have any extra information for you at this time. But if we do leave any platform, we'll always migrate everyone to another platform. But we have no plans right now.
Yeah, I'm glad you answered that. Somebody asked me to ask you that when I came on here.
You get the question a lot
about the Project X thing. And I was digging through the Discord. I didn't want to ask this question that's been answered like a lot of times, but I wasn't sure exactly.
According to
you guys are just going to keep going with it for now. That's the answer, right?
Yeah. We're having conversations with them about some long-term options. So we are not on the same timeline. You can create new users and accounts here at the Futures Desk. According to statistics, you have what is the average trade duration traders trade is the most profitable. So trade durations are funny, and I could give you a blanket answer of sort of where hold times matter, but everything's individualized, and I really don't think that's a very helpful way to tell people. I will say a lot of people who scalp, maybe some of those scalping techniques might not work in live. You get a different slippage characteristics. It can be different. So I will say there is a pretty big correlation for number of trades in a day. Again, this isn't saying that if you take a lot of trades in the day, you can't be profitable and do really well. But we do see more green days when people take less trades. That's a different thing than how long you hold a position. If you're a scalper, you could be waiting all day and take 2 trades that are 10 points, for 10-point targets, and that would be scalping. But that doesn't necessarily mean you have to trade a whole bunch a day. So the one strong correlation we do see is less trades generally means more success. And I think the sweet spot is like 4 trades and under in a day. We see more success. But again, it totally depends on the individual. It depends on their strategy. It depends on so many more things. And I know it's fun to talk about the large brush statistics to try to feel like, let me just get into that large brush. But it's so nuanced based on the trader, the strategy, and everything they're doing and which market they're trading, that don't let that affect you too much. What else we got, Raj? I'm having a hard time to set up the night volume regime. Any advice? Yeah, I would say gauge your expectations for the moves. So they're not, the night hours does not move like the New York session, especially the New York Open.
I think you said right, Josh. Sorry to jump in there.
Okay, I'm having a hard time to set up
volume.
Yeah, maybe I just don't quite understand that question.
Right.
Maybe ask it in a different way, and we'll revisit it. So when trader makes it to live, what seems to cause them to fail in live? When traders insist on no daily loss limit, that's our biggest gauge that they're going to fail the account. I know people want a little more flexibility in the assessments and leading up to live because they're trying to move forward. So we do honor that, but if we can stop people from trying to force themselves into live with that, it's much better for everyone. That's a big part. And then I would also say over leveraging. So people want to over leverage, they want to over hold. A lot of it's just, can we keep you in the account long enough so you can deal with getting your sea legs and the transition to live? So anything we can do to help you even just go sideways when you get live is helpful for us. We can just keep you sustaining, and you're like, okay, I understand live now. I understand this stress. I'm back to executing on the thing that got me here. A lot of people don't do that. They get to live and they're like, oh, wow, now it's just this live account and I can make $100,000 today. I've been stuck in this base hit thing and I know I'm really better than that. I can make more and I want to shorten the timeline. Like all those things add up. And then you get a trader that just completely loses control in live. They're not executing what they were. They want to hold the trades longer than they should. They push it. You're pushing it maybe when you're not ready to push it. So I would highly suggest sticking to base hits in live. And we're trying to figure out some ways to reward people for doing base hits in live. So we're playing with some ideas for restructuring some programs or some optional programs. So once you get into sim brokerage, once you get into live, you're just sticking to this base hit concept, and we can start scaling you on that. We're not going to double your contracts. We don't want that. That's going to end up with a bad scenario. But if we can keep you to the base hits, we can all start making money together. We increase your size. You keep going for the base hits. Suddenly base hits aren't base hits anymore. Base hits are becoming, 4-digit days and becoming bigger days. So gradual increase in size, gradual increase in expectations, but at first stick with the same expectations that you had to get there. When can we expect stats for live accounts on the dashboard? We are finishing up a rhythmic permission there, so we're hoping to get that here with the launch of 2.0. Sorry, I'm French. I know my strategy work really good in high volume regime, but I'm having a hard time coding it in the advice. So the same strategy might not work in a low volume regime. I think you just need to accept that. Have you done the back testing? Have you done some forward testing with some simulated accounts? Don't force it because you like the time. Certain strategies are only going to work during certain times. In fact, that's usually the first thing we look at. If we're looking at your stats and we're trying to figure out how you can improve, the first thing we'll do is just look at the hours and be like, look, there's a clear, if you trade out of this hour span, there's enough data, there's enough reason for you to not take this strategy outside of those hours. You're not trying to build a strategy that just works at any time of the day and you can just pull money out of the market. That sounds great, but that's not how the markets generally work. There's generally patterns to when these things work and it usually is related to volume, but the most obvious thing is time. So take a look at that and don't push something into an area where maybe it's just not appropriate. Clean shave, Robert.
Nice.
Yeah, I think.
Thank you. I actually shaved right before I came on. I thought I should shave. That's funny.
All right, let's do the giveaway, then we'll jump to more questions. And Robert, we'll let you say the names.
Sure. Let's see what we got here.
This is $200 credit.
Spinning. This is a $200 credit for futures desk to spin. Let's see who we got here coming up on the wheel. Let's see the name. Who is the lucky winner for $200? Michael Belt. Congratulations. That's awesome.
You should get an email shortly from our marketing team with the credit that you can use at checkout.
Oh, we got another one coming in. Boy, this one coming in hot too. Let's see. He spun it really hard. Let's see what we got here. Coming out for another $200 credit. We have Bruno Americo. All right. Congratulations.
I like that name.
Nice.
Cool. All right, let's do two more. We'll do 2 shirts.
This one's for the t-shirt, the official merch drop. Let's see what we got going on here. Another lucky winner. Oh, the suspense. Let's see here. And it is for the shirt, John Faryar. I hope I'm saying that right. You are the winner of a shirt.
All right, one more. And then we'll get back to some questions.
Okay, let's see here. For the other shirt, we have another shirt coming up. Another lucky winner. And here we go. The winner is Benjamin Soul Jr.
All right. Cool, guys. You'll get a little notification from our marketing team. And let's get back to some questions. And just a reminder, we do have a little static promo going on. Go to our website at the top. These are heavily discounted. They're the equivalent of 75% off, which we never do. And we think it's a very good, sustainable, non-over-leveraged account. I would still suggest even using less than 1 mini micros on most accounts anyways. But I do know people sometimes take shorter moves and they want to size up a little bit. But we're trying to build sustainable traders. We're trying to build an army of traders that can do well in our live accounts so we can all do well together. And we're not just keeping you in a sim account, churning and taking sim payouts. So that's why we're different here, is we're trying to leave you with something that, hopefully you stick around and we earn money together. But if we can provide value to you as a trader and give you a system to work with, the stats to work with, and you can take that and run your own personal account, that makes us happy as well. If you can turn that around and go milk the rest of this space, then, by being a better trader with better risk management, then that's great too. We're just trying to give you guys some value, and hopefully you guys like what we do in the community and you stick around in our live accounts, and let's make some money together. Cool.
For sure.
All right, let's hop to the next question then. Today I get negative for the first time in the valuation. Sorry to hear that, Mario, but don't be sad about it. I know we want any red days suck. It doesn't feel good. That is always going to hit you the same way. Small green days feel like they suck, but you have to think, how do you want to look back at the last month? Because that red day hurting is going to turn into tomorrow. I need to get back what I made yesterday and more. And then we all know where that goes. You're going to snowball, and then you're going to be like, I should have just stopped early. I should have taken my profits and walked away. Like, those are the things that come later. It's just which hurts more, in a month when you look back and you feel like you've just wasted money on eval programs and resets, or if you look back in a month and you're like, no, I've sustained the same account and I'm close to passing and I've built better habits. We always look back after the fact and we think, I should have done it differently. So just embrace the loss. How can I learn to trade with this level 2 data? You know, it's not a necessary thing. It does help optimize entries, and there's plenty of strategies with level 2 data. But yeah, you'll have to look around for resources online. A lot of free resources, a lot of free YouTube. S&P Capital has a lot of really good content that I recommend. Yeah, there's a lot of good content online, so look for it. I've been trading 1 to 4 micros on my assessment, and now I am more than halfway. Minis are too much for such a small drawdown. I agree. Yep. Correct. We always suggest micros, especially with volatility. It's only been increasing. Look at the daily ATR of the last 3 years. Volatility is increasing, but everyone still stands by that they're a quote unquote mini trader, and I can only trade minis. And there's some sort of, there's some sort of nonsense where if you trade micros, then basically you're a lesser person. I'd love to see how those people that only trade minis do in their personal accounts, and if they hold it when they have a few $1,000s of drawdown. There's a time and a place, and risk is everything. So size your risk first, and it doesn't matter what means it is to manage that risk, and it's usually micros. Can you elaborate on what scalping techniques would work live? Is it like 1 or 2 points? No, 1 or 2 point scalps are really rough. Trying to do that live, it takes a lot out of people. Just the natural, we were talking about ATR before. Try to stay in the bounds on your execution chart for finding patterns on those entries based on ATR. If you're doing 1 or 2 points on a 1 minute, for instance, that's a fraction of the candle. So good luck not getting just beaten up with commissions as well as slippage and just the natural way market auctions. You're gonna have a tough time staying profitable at all with 2 point targets on the NQ or ES. If you're trading bonds, maybe that's a different thing. That would be a different situation. But equity markets, good luck. Today's range was 300 points, even with 2 micros. Yeah, 100%. And it all comes down to your strategy and where you can find edge. So where can you find that edge in that 300 points? Size appropriately and work from there. Static contract size allows for consistent value change with the price action. It means variable risk with volatility changing, but with small size. Yeah, that's another way to do it for sure. Definitely, though, heavy risk and fixed contract size is a rough way to do it, I would say. Focus more on the dollar risk per trade. Josh, I'm really busy. Have a hard time spending time on evals. Is there a way I can pay the drawdown and go straight to live? You can set up a personal account. Yeah, we're trying to give you an opportunity here. We're not trying to get people to just set up an account. We're trying to work them through a process, get them to find a system, get them to pace themselves, and then we capitalize you for live. As far as a straight to live program, yeah, that's not that straight to live where you would literally just pay a fee and then we'd set up an account for you. I don't want to do a disservice to realistically who's coming to trade with us in this space. We love getting traders in here who are at the advanced level or higher, and they could come in and we'll give them capital. And honestly, if you're one of those traders, send me an email and we'll go over some of your brokerage statements and maybe we can figure out a partnership to do that. But for most traders, I don't want to see them blowing 3K because they think they're great, or 5K because they think they're great and they're ready, and then they're losing 3 to 5K at a time. I'm not really interested in being a part of that, because most traders coming to us are not ready for that. They need a little bit of rehab, and we're trying to do that in our accounts and our statistics. So advice on knowing when to walk away and having the discipline to do so. I was up 500 and then down. Okay. So you're here to take good trades, right? In the end, the P&L is what matters. I 100% get that. But if you are taking opportunities that are not opportunities because you're so focused on like, oh, I need to get that P&L level up. If that's the reason you're taking more trades when you hit 500, that's your problem, right? Are you increasing your risk? Does that really work for you? There's some people, yes, I get it. Throughout the day, you've built a buffer. You want to maybe marginally increase your risk as you take more trades. and maybe flip that into a much larger size. That's totally a valid situation. I get that. Most people aren't ready for that. So limit your trades per day as much as it sucks. Whatever I'm going to tell you is going to feel bad, because you are going to feel like you're missing opportunities sometime, but you are going to protect yourself on days like today. Stop thinking profits first and start thinking more of managing my risk with the potential of I might get profits later. It's very easy in the space to focus on how much can I make, and I'm just going to keep pushing. I'm going to make more. Oh, look, I did so well. I'm hot. I'm going to just keep taking random trades. And then those trades become more and more random. You are depleting something. You're depleting a mental capital that you can't measure so well. And you're going to be biased. You're going to be like, no, I'm fine. I'm upright in my chair, but realistically, you're going to start making poor decisions, and those poor decisions lead to overtrading. And overtrading, to me, by definition, is taking trades that are outside of my edge. So just think very clearly, is this trade my edge? Is my edge during this time period? Am I sticking to my risk management? And then let all the other cards fall into place. I got in payout 20K last couple of months with Top Step. I'm a loyal customer, and I've been looking into the futures desk. Convince me why I should move into the prop firm.
Nice.
Top Step, they're a great company. They pay out. It's a great opportunity over there as well. We have a really advanced dashboard that we work with. We really build on the stats. We're really hands-on with the traders. We do risk calls with the traders. We do coaching calls really as much as you want by request. We'll adjust your risk limits. But I'd say the biggest part with us that separates us from the rest of the space is we put traders live faster than anybody else, because we do not want to necessarily lean into the sim payout portion of things. So what we're trying to do is make the assessment appropriate enough where I can just unleash your handcuffs once you pass. There's no consistency requirements. You're able to trade how you want to trade pretty quickly with us, where most of the other companies in the space are cap payout here, cap payout there, consistency and funded, benchmark days. We don't have any of that once you pass the assessment. So there's that. And then the other thing is we have static accounts, and we have a whole range of static accounts you can work with. And if you understand what that means, it can help a lot with not hitting your drawdown, because that drawdown is not going to chase you up to zero as you're trading in each of the steps of the stages of getting to live.
We're blowing up.
And then one more thing,
profit.
Yeah. One more thing is that I should mention more is we are CME corporate members. So we do have seats leased on the exchange. So our commission fees are extremely low, even through live. So for instance, if you take a NQ execution, there's some companies in the space you're paying round trip all in, I think $5.80 for an NQ contract. With us, it's $2.40 for an NQ contract, all in round trip. So by extending our seats on the exchange to our accounts, then which are the accounts that you manage, that can add up. That's another fee. So we are extending that to everybody that gets live, and we match that same commission rate in the eval portion. So there's that. Josh, once someone hits the target on a sum BRK, they can request payouts. Of sim brokerage, I think he's trying to say. Yeah. So once you fill your sim brokerage account, which there's no minimum trading days, there's no benchmark days, there's no consistency requirements, we're taking off those requirements. We still want you to hit base hit days because we think that's the best approach. But if you let a runner run and that gets you to fill your buffer, you're good. You've hit the buffer, immediately we enable payouts. So you hit that buffer, we're like, okay, you did this in brokerage account. You lock that in. You can take payouts into your buffer just the same. We're not going to penalize you for it. We do want you to be reasonable about how much you dig into your buffer, because that is your account balance going forward. But then whatever you didn't take initially there, that goes into the live funded account, and that's what you use moving forward. So from the second you hit the buffer, uncapped daily payouts, no penalization for what you do with that capital. We're trusting you because that's what we're doing here. We're hiring you guys as contractors to be our traders to manage our capital. So how you use that capital is how you see fit. What's your trading history, Josh? Do you trade regularly? I wish I could. I dabble all over the space with trying trading out and trying different strategies out. I wish I could trade more. I don't. But about 5 years ago is when I started trading. I shifted to futures maybe 3.5 years ago now, 4 years ago. As a engineer type, I definitely fell in love with a single source of truth for the data, a single source of truth for where orders are managed and matched, as opposed to what you get with NASDAQ and those things. There's a whole different edge and a huge edge there. But I just love that it's one source of truth. Order flow tools work better, you know. If you try to use footprint on stocks directly, you're going to notice that the data is coming in from multiple places where orders are being matched. So the data comes in all mismatched and not linear, where futures, because it doesn't do that, you can have a nice clean read on the order flow. So I love those characteristics. And then I love that I can have exposure to all sorts of different instruments, from energy to equities to now crypto. And I think the CME does a really good job with that. And I'm excited to see all the new products they end up adding. I've heard some rumors of, you know, they might add some of these top singular stocks as futures contracts. So you might see a Tesla show up as a futures contract or something like that. Thanks for the tips. Thought of a new approach right now. Feels way more safe and sustainable. Great. Cool, guys. Just, again, it sucks. It's such a boring topic, and I don't get more sales by doing this, obviously. And we just push risk management so much because it's important for us, and we want to see risk management in the brokerage. Because while there is money to be made running sim companies, there's a lot more money to be made in live brokerage with big traders. And that's where we're trying to get to. TFD has the best fully inclusive experience in the prop industry and truly cares about your success. That separates from them. Not a question, but I'll take it. I appreciate it. Trading for keeps. All right. I think we're running low here on questions. Robert here has his own Discord. It's not paid, right?
No, it's everything.
Just open Discord. Okay. So if you're just looking for more community, other traders like Robert probably have a handful of traders that trade like Robert in there, I'd imagine.
Oh, absolutely.
Probably overlap there. So if you're into market profile or you want to learn about market profile, check out his room. I will say I've never been there, but Robert seems like a cool guy. This is the first time we've met. So check it out. And then in our Discord, you can reach out to us, ask more questions, and we're all there. Our whole team is monitoring it, and we will respond and have more trading conversations with you guys. But cool. Yeah. Use code RTF. Check out the 75% off accounts, and maybe we'll see you on the next stream, guys. Catch you later.
Thank you. Thanks, Josh.
Thanks,
everybody.